Home prices, are they finally cracking, gentlemen? When we think about price reductions, geographic areas around the country where we're certainly seeing days on market increase, and even the psychology of the sellers, have we finally reached a point where folks are actually going to be reducing the price of the existing inventory? What do you think?
Well, in the like looking at the pending that newly pending home sales set, the homes that are going into contract now that are will sell in July or will sell in July and August, we're looking at about a 1.7% price increase nationally, like just barely positive year over year. Depending on how you measure prices, it's maybe 2%, 2.5% is like the high end of how you measure prices. And there are about 8 states, 9 states that are negative from last year, and most of those are Sunbelt. And so those are the ones that the
Any
inventory is built.
surprises in there, Mike? Like, I feel like the usual suspects, but out of those eight or nine, are there any surprises that were, wow, we can't believe that we're trending the opposite direction?
No, I mean, no real surprises to me. So it's Texas and Florida, it's Georgia and Arizona. For some folks, might not realize Colorado
Yep.
is in that mix. So, but it's the same phenomenon, right? It is the move from the north to the south that we've been doing for a long time. That when it got expensive to move, not just because of rates, but also because of inflation on washing machines and insurance. And when it got expensive to move, we stopped moving. And so Colorado's been a big inbound migration state. And so it slows way down and a big inbound migration state, a big new construction state. And therefore, so Colorado is in that negative year over year list as well. And that might surprise some folks if you haven't been paying attention. Nevada was stronger for longer than I was expecting. Vegas held out longer, but is now looks like almost flat. And we'll probably go negative in Nevada. On my list for next are like Nevada and probably Tennessee. Tennessee's like flat. South Carolina, Louisiana, some of those as well in that sense. And that's really, those are exactly where inventory has been building. And it's not just inventory building this year. It's really 2.5 years or 3 years of inventory build. And we're now seeing that the price is correct. We're finally basically to a point, we came off of such lows of inventory. So even when inventory was climbing 50% per year, it still wasn't that many homes.
Yeah,
So now we're finally at the level where the baseline is high and the inventory is climbing higher. And so now the pricing, you can see the marginal pricing impact hitting right now.
yeah, a couple things there. One is Mike referenced that there are 8 or 9 states where prices are down year over year. The list of states that have more inventory today than they had prior to the pandemic is almost identical to the states where we're seeing prices come down a bit.
Yeah.
The inventory also is growing for different reasons than what we're used to in a normal market. Normally, there's a very strong correlation between inventory growth and new properties being listed for sale. For the last couple of years, that's been disconnected. So inventory overall is probably up between 25 and 30% year over year, but new listings are only up probably 10% or less during the same period. So the reason for the inventory growth is what Jeff was talking about. Once these properties are listed, they stay in inventory longer. NAR's most recent data said the median number of days on market nationally was 53. That was up about 10% year over year. But where Mike and I are in California, it's up 20%, but only up to 23 days. If you're in the Chicagoland area, it's 80 some days. If you're in Denver, it's 60. So it really depends on where you are. But the bottom line is more inventory. In some markets, probably a little bit too much inventory to be sucked up by demand. And because of that, we are starting to see prices soften in parts of the country. But I don't know about you, Mike. I still don't believe that by the end of the year, nationally, we see prices decline from where they were in 2024. I could see them going flat, but I still think there's parts of the country, like where Jeff is in Connecticut, where prices continue to go up, and that offsets some of the markets where prices are declining.
Yeah, Connecticut's been the hottest market in the country. The but yeah, and I would agree roughly that that's the case. We have I still, if did some forecasting work at Housing Wire that was that still assuming a couple percent home price gain. And again, if we get a conditions where rates jump to 7.5%,
Oh,
I
okay.
think that will be enough to swing demand even lower, and we could see prices swing that negative. If we get lucky in the other way and rates drop a little bit, that would be enough to buoy demand and buoy prices for the end of the year. So you still have this plus or minus range, but it's right around zero. Like it's maybe a little above or maybe a little below nationally. You also point out like that new listings number each week. There is on the inventory. So the unsold inventory is the number of homes on the market. And then each week there's the number of new sellers, the new listings. And inventory, if in a panicky market, if sellers are saying, I got to get out of this thing, or if investors, Jeff, with your folks are saying, we've got to unload these because they're not penciling out. If those are surging, that means we're at a reasonably high level of inventory, and we're adding to it a lot each week. And that would be a combination that would be much more bearish for pricing than we actually have. What we have is, we've got 3 years of higher rates, 3 years of inventory building, but we still don't have a lot of sellers in a given week. And so most sellers, like 80% of the country, has such an ultra low mortgage rate. If they don't have a good market, they don't have to sell. They get the best terms ever. They got a ton of equity. If they sell that house and they want to move someplace, they can't rent for cheaper, right? So those folks are still keeping a lid on the most bearish scenarios that we might face in housing in the next 18 months or so.
A lot of people don't realize how big a role people needing to sell their house played in the crash back in 2008, 2009, 2010. You had people who had gotten into really bad mortgages who shouldn't have been able to get into that house in the first place, who simply couldn't afford to make payments once mortgage rates reset, wound up upside down on their loans, had to sell the homes and had to sell them at a loss. And that became part of that perfect storm of bad conditions that helped force prices down. But to your point, I'm sitting on a 3% mortgage right now, probably paying less than I paid monthly when I bought the house in the first place. Yeah. If I don't have to sell, I'm perfectly comfortable to wait out market conditions until the things are more in my favor. Yeah. And Jeff, you and I have talked about this. I've been saying for a couple of years now that when mortgage rates doubled after a 40-some% increase in home prices, one of two things could happen. We could either see home prices crash, or we could see a 3 to 5 year period where the market took its time to reset at these new levels. And to me, it feels like we're in about year 3 of a 5-year cycle.
Yeah, we could see like 2 more years of higher rates, get inventory back. You get another 8 million people who don't have cheap mortgages. So then they're more likely to resell rather than hold on to that forever. So you get higher new listings each week, and those kick in. Yeah, the only segment that has any signal of being in a bad loan right now is if you bought. There are FHA buyers in the last 3 years who put down 3% in a market that's maybe a little sketchy, and how they juggle to get even that 3% down. Like there's a growing in some phase of default distress in that FHA, but the FHA loans are they're a pretty small segment of the market. So it's not a widespread thing. It's not a 2008 thing, but those are the ones to pay attention to.
There's about 7 million FHA loans out there out of a total of maybe 53 million active mortgages. 11% of them are delinquent. So you're looking at about 770,000 delinquent loans.
Yeah.
And a higher percentage of them are starting to roll into serious delinquency or even foreclosure. But the ones that are most vulnerable, to your point, imagine buying a property in Punta Gorda or Cape Coral, Florida, a couple of years ago. Home prices are now down double-digit percentages since you bought. You only had 3.5% equity to begin with, and you just got an insurance premium bill where your rates have tripled. For a lot of those borrowers, there's just no way for them to handle that.
Right.
And I think that will add to a number of distressed properties we see on the market, which, ironically enough, is an opportunity for a lot of Jeff's customers because they're looking for those kind of investment opportunities.
Right. Yeah. Like finally, like those haven't existed in so long. So,
and it's been a long time before we've seen that sort of inventory coming to the market. I don't even want to call it distressed. It's not distressed, but it could become distressed without a doubt.
Right. And it's really the only segment that is anywhere near becoming distressed.
Jeff, I don't know what you're seeing in your database, but Mike made a point about maybe investors starting to sell off, and I just finished a Q1 analysis of investor purchase and sales activity nationally. And investors accounted for about 27% of all home purchases in the first quarter, which is the highest percentage in at least the last 5 years. Partly because their sales are up maybe 9% over the last couple of years, in larger part because a lot of traditional home buyers are sitting this cycle out. But the year-over-year numbers, quarter-over-quarter numbers, we're seeing more purchases than sales, except, and this is kind of ironic too, except among the biggest institutional buyers. For the last 5 quarters consecutively, they've been selling more properties than they've been buying. But every other category of investor continues to buy more than they sell.
Which is interesting because that does not meet the narrative that we often hear in the marketplace, right?
Yeah, Wall Street's gobbling up Main Street, except if you do the math.
And they're actually net sellers for the last calendar year. Oh, further than the calendar year, actually. One more question before we move on. When we think about list price reductions, is there any data on how quickly folks are moving those list prices to attempt to your point, Rick, people that have to sell? Is there data that's readily available for that?
So yes, in the Altos data we track the percentage of homes on the market that have taken price reductions. So that is the total number from the original list price. And then we can look at the slope of that curve, which is the velocity of that. And what that tells us, right now is that there are more homes in July that have taken price cuts than in any July of the last 15 years or so. Like it's going all the way back to coming out of the bubble burst. But it's not accelerating super fast. It's accelerating at its seasonal normal pace. Like like there are more. What happens is, fresh inventory comes on in Q1. If it's still there, price reductions start curving up in Q2. If your house is still on the market late in the summer, you're more likely to do a price cut. So it peaks, price cuts peak in the fall and then reset for the holidays. And so there's this normal curve. So we're on our seasonal climb and we're already higher than normal. Now in 22, when the market was shifting quickly, you could see the slope of that thing was real fast. So we could see it accelerating. So even in it really starting in like March 1 and then March 2, about second week of March, and you could see it accelerating by May, by July. I was sitting here jumping up and down going, if you're thinking about listing a house, you want to be ahead of this curve.
Yeah.
And not behind it. So now though, the slope is not is not that steep. It's not improving, but it's not like I don't look at the price reductions data and go look out below. That's not the signal that that's giving. The signal that it's giving is there's certainly no we're not shifting to 5% home price growth this year because the homes that are on the market are cutting their prices. So so that's what we can see in the price reductions data right now.
You have any sense for the degree of these price reductions? I looked at California data, and the median price reduction for homes sold in the state was less than 5%. So we're talking about a lot of price reductions, but are they dramatic?
So they around 5% is actually totally normal. You've got a $400,000 house and it's not, you don't have an offer at 401. And so you're like, let's try 393. Right. And that's suddenly 5%. Right. Let's try 395. And so you can imagine that 5% range is quite common. We haven't seen anything in the data that says that's accelerating there either. But so that's the rule of thumb. About 5% is a price reduction. You get it below that threshold number. We were at 404 and now we're at 399, whatever that, the thing is there. Or we're at 395 or what, so you can see those. But if you were to go, an 8% price reduction, that'd be a big cut. Right. So you can understand why it'd be under 5% would be a common thing. And so nationally, the median price, you look at the active market, it's a 400, it's like in the 450 range. And the magnitude of those price reductions is usually about 15,000. So that's 3% nationally.
The other price point, Jeff, that is kind of interesting is, and Mike, we've been talking mostly about sales prices so far, but Realtor.com reported about June data that they're seeing a 0% increase year over year in list prices. Mm-hmm. So while they're still seeing a little bit of an increase in sales prices, their data suggests that people are listing properties basically for the same amount they were a year ago.
Yes.
I'm not sure if that's true with your data as well.
That's absolutely true with our data. Although that was, and it was true in June. And let me just look right here, closer to 1%, maybe ticks up a little bit in the last couple of weeks, but because it was particularly bad in July and August of last year. Depends on which number you look at. It's like 0 or it's 1% positive or 2% or, that's the range that we're looking at.
Well, since I'm thinking about this, I can't help but ask, right? As you think about that big number, that 0, whatever, boy, it's got to be skewed tremendously by different geographic regions, right? Like if they're saying, well, it's 0, but we know in, Ohio right now, the numbers are way better than they are in Tampa, right?
Yeah, that's absolutely true. So it does depend on where you are. Although there is, even the markets that have been the best for the last couple of years, the Northeast, the central Northeast, the places we've been leaving really quickly for 15 years that we stopped leaving that quickly. Those are where the inventory is still just barely coming off the pandemic lows. Prices have still been up, but even in those markets, inventory is inching higher, and that annual price appreciation is coming down. So maybe it's 6%, and it was 8% in like Buffalo a year ago. Maybe it's 6% now. But, I was talking to an investor friend who in the Chicago area who's like, I have a property in Chicago and that thing did not appreciate in price for 20 years. And finally it's going up. Right. It was, and so, and I, or another friend who's got family, I grew up in Buffalo and we got to get rid of mom's house. And they're like, now's the time to do it. And it doesn't, in my view, I don't see signal of, we're not going to get there's no bull market, super bull market, any of those. There's inventory's tight. And if you're starting a family in Buffalo, you want to buy a house but you used to buy it from the guy who just moved to Orlando, but he didn't move this year. So, you're still buying. So that's the dynamic that's happening there. And that's why Buffalo prices are tight. It's why inventory is still tighter. That's the dynamic that's happening there. And, but even in those markets, like inventory is starting to build a little bit. And for a while this year, Connecticut was still negative, had fewer homes on the market than last year. But even Connecticut is positive this year. So it's finally those are starting to inch up too.
Interesting.